This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Crude oil prices in much of the world's physical markets have started the year with a rally amid signs of more buying from China after it eased COVID-19 restrictions and concern that sanctions on Russia could tighten supply. China, the world's biggest crude importer, started rolling back its zero-COVID policy in early December in a development the International Energy Agency, IEA, expects will boost global oil demand this year to a record high. At the same time, a European Union ban on Russian crude imports which took effect in December will be broadened to include refined fuels from February 5, and is expected to further tighten supply from Russia.
Oil prices rose on Monday to $88 a barrel, extending last week's gains on the back of a stronger outlook due to an expected economic recovery in top oil importer China this year. Brent crude was up 42 cents, or 0.48%, to $88.05 at 10:25 GMT, while West Texas Intermediate, WTI, U.S. crude rose 33 cents, or 0.4%, to $81.97 a barrel. Last week Brent rose 2.8%, while the U.S. benchmark logged a 1.8% gain. Asian trading was slower due to the Lunar New Year holiday, but analysts said that optimism regarding China's reopening will likely drive oil prices higher.
Moving on to the top news in the energy sector.
Upcoming European Union proposals to overhaul the bloc's electricity market will attempt to make consumer energy bills less tied to short-term swings in fossil fuel prices, the European Commission said on Monday. The EU is reforming its power market to attempt to avoid a repeat of last year, when cuts to Russian gas supply drove European electricity prices to record levels, hiking bills for households and forcing some industries to close. In a public consultation launched on Monday, the Commission laid out numerous options to overhaul the way power plants sell electricity, as part of the market reform it will propose in March.
Britain's National Grid said it would pay customers to use less power on Monday evening and that it had asked for 3 coal-powered generators to be warmed up in case they are needed as the country faces a snap of cold weather. The group said that it would activate a new scheme called the Demand Flexibility Service where customers get incentives if they agree to use less power during crunch periods. The service, which has been trialed but not run in a live situation before, would run from 5 p.m. to 6 p.m. on Monday, it said, adding that the move did not mean electricity supplies were at risk and advised people not to worry.
Next, we have the top news in metal markets.
India is expected to slash the import duty on gold to undercut smugglers who have been offering hefty discounts as illicit imports boom after COVID-19, denting the market share of banks and refiners, government and industry officials told Reuters. A cut in the import duty by the world's second biggest consumer could lift retail sales by making gold cheaper ahead of peak demand season and support global prices. It could also revive operations of domestic gold refineries, who have seen their business wither over the past 2 months as they are unable to compete with grey market operators.
Crude steel output in Japan, the world's third biggest producer, fell 7.4% in 2022 from the previous year due to a slow recovery in automobile production and weaker export demand amid a slowdown in the global economy. Output dropped for the first time in 2 years to 89.23 million tons. Figures from the Japan Iron and Steel Federation showed on Monday. During the COVID-19 pandemic, Japan's Toyota Motor Corp 7203 T fared better than most carmakers in managing supply chains, but it fell victim to the prolonged chip shortage last year, cutting monthly production targets repeatedly. We will now look at the top news in the agricultural. Argentine Economy Minister Sergio Massa met with agricultural exporters on Friday to analyze and seek solutions to help the country's key grain industry after it was hammered by the worst drought the country has faced in at least 60 years. The dry spell is contributing to a broader economic slump battering the South American country, marked by sky-high inflation and a weakening local currency. Massa said he would meet with farmers over the next week, and by the beginning of February expected to have prepared some answers for farmers struggling with dry soil resulting from a drought that began in May.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.